A futures market exists for most major commodities, allowing producers and users to lock in prices for a future date while also enabling investors to speculate on the demand and price of everything from orange juice to oil to gold. But diamonds have been one glaring exception.
Diamonds may be a girl's best friend, but they haven't had much of a relationship with the futures or derivatives market. But that may be about to change, thanks to one of the industry's leaders, Martin Rappaport. He's the chairman of the Rappaport Group, which is a top source of pricing and market information in the diamond world.
It is our intention to launch a futures market for diamonds in 2016 that will be based on a strong spot cash market. That futures market will enable the diamond industry to reduce and even eliminate the risk of diamond price changes and the holding of inventory. That, of course, will increase the opportunity for finance. It'll also allow investors to get fair market value prices and to make sure that their investments are regulated and reasonable and that they will benefit from any price movements in diamond price.
So why are there futures markets for everything from silver to soybeans, but not for these sparkling gems?
There is no futures market or derivatives markets for diamonds right now because we have to first create a viable, transparent spot cash market. The futures market must be related to the delivery of diamonds in a specific time. Those diamonds have to be very well defined as to what they are. There has to be price transparency about them. There has to be reasonable transactions cost for being able to buy and sell them by investors. And there has to be a liquid spot cash market for those diamonds. Put those four things together, and then we will have the basis for creating a futures market.
Part of the appeal of diamonds is that no two are exactly the same. And therein also lies one of the challenges.
Standardization of the product itself. I think that there's such variation between different types of cuts that you'd have to create a basket that's uniformly considered the benchmark. The other issues would be standardization of grading. Currently, there are many laboratories worldwide that grade. It would be quite a task to be able to get the entire world on the same page.
It's a task that Rappaport thinks he can take on.
We're going to specify specific polished diamonds that have been graded by the Gemological Institute of America as well as our own laboratories. Those diamonds will be fungible with each other and will create a bundle of such diamonds for delivery into a futures contract.
The diamond industry extends from miners to polishers to manufacturers and, of course, finally, retail. The worldwide retail market alone is valued at over $72 billion. So could this be a game changer?
A diamond futures index will help manufacturers and distributors in that they will have less exposure to currency fluctuation as well as the cost of carrying items. The negatives will be the speculation. Within the industry, there already is an issue of speculation. To bring in outsiders will have a negative effect.
Those outsiders would be able to push prices higher or lower, like they do now with other commodities.
Investors that want to participate in the change of diamond prices, either up or down by going long or short, will be able to do so with a high level of confidence that that market will provide honest pricing transparency, liquidity, and the ability to get in and out of the diamond market in a regulated, efficient manner.
And if all goes according to Rappaport's plan, this will be a glimmering reality by the summer of 2016.